Here's Punita Kumar Sinha of Blackstone with her thoughts on the market, the big bear market rally we've seen so far in global equity markets, and why she's so cautious about the elections.
Even in a bear market, you have bear market rallies, and I think we are possibly seeing a bear market rally. It's too early for me to say whether this is a secular shift. I doubt it is, given that the global economic environment is so weak.
We've had a few of these since 2008, these 10-15% kind of moves. Do you think this is one more of those? Because in bear markets, sometimes you get rallies as powerful as 40-50%. Does it look like it has the shape of becoming something as meaningful as that?
Maybe not 40-50%, but possibly it could extend, given that the Fed, yesterday came up with some very strong announcements on the liquidity front. Credit has been tightening too in the U.S. So generally, credit leads. Credit tightening is, always a leading indicator for equities. So I think it's very hard to say. Volatility, the VIX index recently has been behaving itself quite well. So it might extend. I really can't predict.
What is sentiment like, Punita? I mean, you speak to so many people from that universe. Is it as pessimistic as it was going at the end of 2008, or are you sensing that there is some return of risk appetite and sentiment has lifted somewhat?
I don't think that sentiment has lifted, but I do think people feel like a bottom has been made and that we have some support levels below which the markets may not go. But does it mean that it will test those lows again? It might. I think the sentiment is fairly bad also because unemployment is rising and across the globe. So generally people are very pessimistic about the future prospects of their own spending as well as the economic environment.
Do you subscribe to that view that a bottom has been made? Because after that October-November low, a lot of people said that we have a bottom in place for 3-4 months, and then we just slice through those bottoms with such effortless ease.
Actually, interestingly, I did think that the bottom was made in November, and while India did break through that bottom, the MSCI Asia index did not break through that bottom and has not tested the November 20th bottom yet. So on a broader basis, I think that bottom holds in place for several markets.
The last 5 months, we've been just oscillating in this 8,000-10,000 kind of band. Do you think we'll get away with this kind of a consolidation range, and would it surprise you if the market broke down to something like 6,500 Sensex? Is that conceivable in your eyes?
I think it is conceivable, but if the S&P goes to 600, then the Sensex could go down to 6,000. And this is purely based on what the technical analysis shows. So I wouldn't be surprised right now by anything, quite honestly.
Yeah, that's true. But from a valuation perspective, you could still justify that? From what you're saying, the 2002 low valuations, would that correspond to the levels that we just spoke about, 6,500?
But that depends on, what you factor in for earnings. I think more likely what we saw I think the last low was about a Sensex level of 7,700 or something. I think that's possible if we come up with a very weak government and we don't have a good outcome in the elections. It's possible. Well, I don't see, sorry. I think even if it goes below that, it may be for a very, very short period of time.
What is your best guess of what kind of FI flows we might see in emerging markets in Asia and specifically India? Because 2009 hasn't exactly started well. We've already seen withdrawals of a couple of $1 billion plus. Do you think 2009 is going the 2008 way, or is this just a bad start which might get reversed?
It might possibly get reversed in the fourth quarter. Right now, everyone is a little unclear as to nobody wants to. People have called the bottom several times and have jumped into equities only to lose money. So I think people are a little bit more risk averse than they were even 6 months ago. I was looking at an interesting statistic, which is right now the total amount of money that is invested, dedicated to India, is about a third of what it was in 2007. So 2/3, I mean, has gone. Some of it is redemptions, some of it is just the market fall, and we are ahead. We are at about 2005 levels in terms of assets invested in India. So obviously, clearly, that has shown you how much we've lost, and whatever we gained in the last few years, we've lost that. But that's also true for other emerging markets, particularly Asia, where we've also seen the same. 1/3 is what is left, and it's back pretty much to 2005 levels.
I was looking at your Asian exposure, Punita, and you have less than 10% in the Asia fund in India. Does that mean you're circumspect about how India might perform relative to Asia in the next 1 year or so?
Not in the next 1 year. I think I'm generally positive on India due to the domestic demand story, which is very strong compared to the rest of Asia. So on that count, I'm positive on India. But where I'm concerned is about the elections. And until the elections, I don't want to take an aggressively overweighted position in India.
How are you approaching the elections? Do you think it's, as a lot of people believe, a make or break event for the market? Or are you waiting for it with some degree of opportunism that if there is a bad outcome, it might give you that big leg down, which is the entry point to go to increase India weightage? I mean, what's your stance going into that event?
I think the stance is cautious. But if you look at historical data, you do find that either markets always rally with the pre-election rally or a post-election rally. I don't know which one is going to be this time. It all depends on the news flow that we hear between now and the elections and post-elections. So I'm definitely going into this cautiously because I don't really see a very clear trend that has emerged, at least so far.
As an investor, would you change your view on the market if you got the worst case outcome, which for most investors is a third front government? It seems unlikely at this point. If it were to come about, would you change your view?
I think that we need a stable government. Coalition governments don't always aren't able to deliver very good governance. And so I think if we have a weak coalition government, that will definitely increase the risk premium, and we will probably need even lower valuations than what we are at today. But it depends on the nature of the government and what they can pull through.
What worries you more about India? And what worries investors generally in your part of the world more about India, you think? Is it the macros, like a ballooning fiscal deficit, a rupee which is steadily depreciating, those kind of issues? Or is it micros, like the market fully hasn't priced in the earnings damage yet?
I think it's both. Definitely the fiscal deficit is a big concern. The rupee obviously is a result of that, and that's a concern. There is another concern that people have of India, which is not to do with India but its neighbors, that India is sitting amongst many troubled neighbors, and that particularly people are worried about the impact of Pakistan on India. So that I hear a lot of foreign investors voicing. I do think at the micro level there is still, I think earnings this year are going to be worse than what we're going to see at the end of FY09. So FY09 is going to be better than FY10, possibly, and there could be more deterioration in earnings downgrades. However, a large part of that may be factored into valuations, but there could be some negative surprises there too.